Oh, hi everyone. Welcome to this very quick session where I'd really like to do a kind of follow-up on a video that I did last week, a little presentation that I did on what was happening in the three major ETFs, which was basically the SPY, the Qs, and the DIA. And I just want to see what's been happening, as I said, since I did that video, because it's really very interesting from a VPA perspective. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. So I will just take that away. And I've got my NinjaTrader platform. I've got all sorts of things on here, but as I said, the instruments that I want to focus on are the SPY, the Qs, and the DIA, which is obviously the ETF for the S&P 500. The Q is the Nasdaq, and the DIA is the Dow Jones. And I'm actually going to look at, to start with, the weekly chart, because obviously, you know, there's been a lot of volatility this week. It's been a real low roller coaster in terms of price action. But in a sense, we've not really moved away from the basic structure of the chart that I described and explained in detail in that video. And you can catch up with that video on my YouTube channel. It was on the 3rd, which was last Thursday, because what these three markets were telling us quite clearly, that there was a degree of, or there is a degree of divergence. This is the Qs, and the divergence is where it is actually trading, and in terms of, is it above what we call the volume point of control, which is this yellow line that we can see here, and if it's trading above, despite the price action that we've had, despite the down days, you know, we have still had some, you know, some buying coming in, you know, until it breaks this level, which is the 320 level here, you know, you could still say that there is some bullish sentiment here. And we can see this clearly. We didn't see it so much last week, but the candle that I highlighted in my video was this one here, where we had this this wick to the bottom of the candle, where clearly there was buying underneath it. But I did say that it was anomalous, because, you know, you look at the range of this candle, and you look at the volume underneath it, and you look at the range of that candle, and you look at the volume underneath there, you know, that is the anomaly that we are type of anomaly that we're always looking out for, whatever chart we are analyzing, in whatever market and in whatever time frame. And in fact, there was no follow through. As I said last week, there was a little bit of weakness, but, you know, it was contained. Now this week has been further sort of down, but straight down to the volume point of control, because what I actually said was this would act as good support, and in fact it has acted as very, very good support. And in fact, we're seeing the week, although it's been a you know, a roller coaster in terms of on a daily basis, we've had you know, some good two-way price action. We are seeing some you know, the wick to the bottom of this candle, and we're almost at the end of this week's close of business. You know, there has been buying, so the volume point of control has actually, you know, done its job, as it were. Now, what happens next week? Who knows? There are two major events that we need to be aware of. Is, first of all, we have the Fed, we have the FOMC on Wednesday, and on Friday we have quadruple witching day. Those of you who may not be aware of this, this is when we have expiration of not just the usual stock options and index options, but you have stock index futures, stock index future options, stock options, and single stock options. They all expire at the same time. It happens 4 times a year. You have massive volume coming in, certainly towards the close of business. So this time next week, you know, it will be fairly chaotic, as it were. But in the lead up to it, markets, people say, oh, they're not volatile. I think they are volatile. We have the volatility from what is happening, obviously, in Ukraine. So you have these 2 major events next week. So these levels that we're seeing, certainly on the Qs, and we'll have a look at the SPY and the DIA, they are going to be absolutely crucial. David and I are working really hard and as fast as we can on putting together a stock trading and investing program, and the option, there is a huge section on options, because it doesn't matter whether you simply trade on an intraday basis, or you're you know, you like to hold for a few days, or you're an investor. You really have to know what's going on in the options market. When we first started, the options market was very rarefied. It was you know, confined to very specialist trading, but no more. And even if you are just day trading a single stock, or you're trading an index, or you're trading something like an ETF, you have to understand what is going on in the options market, because of, first of all, the sheer volume that's involved. And I don't know what the volume, you know, we're looking at next week, next Friday on expiration, but last year on one of these, on a quadruple witching day, you know, we're talking billions and billions, if not trillions, of values of contracts coming to expiration. And what is also key, the levels we are seeing on these charts also reflect key levels in the options market as well. And so what we want to do in this program is make traders and investors aware that even though your focus may just be on a single part of the market, it may just be on 1 or 2 stocks, maybe it's Apple, maybe it's Tesla, maybe it's on the you know, as I said, on one of these ETFs, you've got to know what's going on in the options market. Right, to return to the SPY, really not much change. Again, the chief difference between, as I said, the Qs, the SPYs, and the DIA is where the price action is currently sitting, and it's still very much below this one, the volume point of control. This was last week. We ended up with a kind of doji, a lot of volume going in underneath it, but it couldn't get beyond this it's just about the 440 level. Now, I've done a bit of quick research, and I haven't got the actual numbers, but it also coincides with massive option strike prices. As I said, I don't have the exact numbers and the exact volume, as it were. So this level is clearly important, not just to the cash market, but also to the option market as well. So what are we seeing at the moment? As I said, we've had a roller coaster, but we are still trading below the volume point of control. And if we look at the DIA, which is obviously for the Dow Jones, again, very similar. Probably this didn't actually retest the volume point of control. It's, you know, below it. The levels that you see here in these numbers, these are my Camarilla levels. These will be here for the rest of this month. The third level has come into play this week, so clearly giving some support, and we've got a little wick to the bottom of this candle, but you know, volume is really nothing to write home about. Just very quickly, again, back on the SPY, yeah, again, you know, the S3 has come into play. We had the S4 is down here, which was the low of the, not last week, but the previous week. So, you know, it's where the price action is currently trading in relation to the volume point of control. And those of you who may not know what the volume point of control is, volume and price over time is where you have, it's kind of a sort of, you've had a fair value area, price was happy to transact in and around that area, but it also acts as support and resistance. And if we look at price, we've got some strong price resistance just above it here. This is this hatch line from the accumulation and distribution indicator, as I said, on the SPY. Going back to the Qs very quickly, when it's not resistance, it becomes support, and we have, you know, we've got these three levels of support, 2 levels of price support here. This is the volume support of the VPOC itself. It's also at the 4th Camarilla level, and you know, if it goes through there, you've also got some fairly decent support here down to 310. What's going to happen? Really don't know. We have to, things are moving so fast, things are happening so quickly, as I said, and in the background you have these 2 big events as well. If you are an intraday trader, you really have to be very light on your feet. If you see an opportunity, you know, the setup looks good in terms of the price action, you know, the volume is supportive of it, you know, and just go for it, but don't expect to be in there very long, and adjust your position sizing. You know, don't go in gangbusters, just, you know, keep everything small, keep tight stops, and you can, you know, you can make money. This morning, you know, when there's a change of sentiment in this market, and changes in sentiment happen so quickly for all sorts of different reasons, you know, what may be happening in Ukraine, a piece of news, you know, go for it. If it's there and it suits your setup and everything lines up, then go for it. I mean, David did it this morning. There was a window of opportunity, you know, the yen was selling off, market was feeling positive, so he sold the yen. He sold all the yen pairs, but he didn't stay very long. David normally stays in for days, sometimes weeks. He was in there for a couple of hours. He said, you know what, because this is what this market is like at the moment. It's always uncertain, but there are you know, multiple additional layers of uncertainty. And just to end up as a general look at what the VIX is doing, which is also very interesting, given, you know, how markets are on this roller coaster. The VIX is, you know, it's back down to 30. But what's interesting on the daily chart, this is the VIX that I have from my MT4 platform, my Forex account. It's again, it's above its own volume point of control, which, you know, you could say, well, it doesn't really sort of, you know, augur very well. What's also interesting, you've got falling prices. There's actually a wick to the bottom of this candle, but look, you know, this volume, this activity is falling away. So again, that is anomalous. So what is the VIX telling us? Yeah, it's not, you know, it's not really reflective of a market that is in panic, certainly not, but it hasn't been even since, you know, the 24th of February. It certainly spiked higher, but nothing to the extent that we saw during the pandemic, basically. But on the other hand, what is the VIX signaling? So as I said, yeah, things are holding up. Well, they're certainly holding up in the Qs. Probably not so much in the Dow Jones, the DIA, the SPY. Going back to the SPY, that certainly tested the resistance that we saw at the volume point of control. If I just bring it up again, bring it up very quickly. You know, where are we, SPY? Yeah, it tested it last week, not this week. You know, all feeds into, you know, the narrative that we are likely to see next week. Right, that's all I wanted to say. As I said, I just wanted to keep it very, very short, just to, you know, have a look at what the charts were saying, as I said, based on the weekly chart, because of the structure that I had commented on last week. More volatility to come, more of a roller coaster. Lord knows what is going to happen. Certainly on the geopolitical side of things, And on from a market perspective, as I said, these two major events next week, the FOMC and the quadruple witch chain. So all I can say to you is I wish you a good weekend. I hope you have time to spend it with your friends and family, and keep them close in these terrible times that we are living in. Whatever time you can spend with them, as I said, enjoy it. If you are not aware of the indicators that I mentioned on the chart, very quickly, I'll just bring it up here. They are ones that David and I have developed for ourselves, and they're available from quantumtrading.com. These are the ones for as a Ninja Trader, but they're also available for MT4, TradingView, and TradeStation. They're not exactly the same on all the platforms. It's really dependent on the code that the platform provides for the development of the indicators, but you will find sort of consistency certainly between Ninja Trader and TradeStation and TradingView. For example, the accumulation and distribution will be the same. The VPOC is the same across all of them, by the way, the volume point of control. It's just the way the support and resistance lines are drawn on these three platforms, where you have this thickening of the line, whereas on MetaTrader, as we can see here, you have, let's have a look, you have the single lines that you see here. You have a hatched and you have a single. You don't have a thickening of the line, which tells us that that area is getting stronger every time that it is tested, as it were. So I'll be back next week. There's certainly going to be a lot to say, I'll try and do more videos next week and record a few more than I've been able to do this week, just to see if we can get a heads up of where these markets are going, look at some more VPA setups for you, and give you as much support as I can in terms of what the markets are likely to be doing next. So as I said earlier, enjoy the weekend, and I will catch up with you next week.